What's up, everyone? Welcome to episode 21 in my monthly series where I present to you my top 3 dividend stock picks of the month that are designed for income, and where I'll give you a little high level update on the overall stock market in the last month as I see it. So, if you're new to the channel, welcome aboard, guys. This channel focuses on a long term buy and hold income focused or income oriented investing strategy. So the primary objective of this strategy is to generate relatively safe, high, and consistent passive income forever. So we achieve that goal by investing in funds that primarily hold blue chip stocks and that use income enhancing strategies like leverage or covered calls in order to achieve that high income in a safe manner. So this strategy or this investing strategy enabled my wife and I to become financially independent in our mid 30s back in December 2019. So this channel is simply to show you how we invest, how we did it, and how to invest for maximum passive income so you too can achieve financial independence as quickly as possible. So I'm Canadian, guys, so most of the stocks, most of the funds that I talk about on this channel, including my stock picks, are listed on the Canadian stock market, the Toronto Stock Exchange. But since we invest in US funds, in our RRSP accounts, in our retirement accounts, 1 out of the 3 stock picks will be a US fund or a US listed stock pick. So stay with me if you're American. The first stock pick will be the US listed one, so it will be for you. And if you're Canadian, the first pick is always great. The US stock pick is always great to put in your RRSP because there is no withholding tax on any income that comes from a US listed fund, but that's only in your RRSP. So if you like the pick, the American pick, put it in your RSP. That's the best place to put it. Also, don't forget, guys, to check out my previous monthly stock pick videos if you're new to the channel or you've missed them, because a lot of those picks are still great. Nowadays, I actually have a specific YouTube playlist where you'll see all my videos for my picks of the month. So it's very easy to find them. I took the time to make other playlists as well, guys, where I group related videos together, like my portfolio unveil videos, which are by far my most popular and most viewed videos, where I show my entire portfolio from A to Z. And also there's other playlists including videos on my investing strategy, on my investing philosophy as well, etc, etc. So check out the playlist, guys. It's a good place to start if you're newer to the channel. So now it's time to talk about the overall status of the stock market. So this is my monthly stock market update. So finally, some volatility in the stock market, especially in the last couple of days. This is always great if you're like me, a long-term buy and hold income investor, because number one, it's a lot easier to find great deals out there. And number two, since we just buy and hold without the intention of ever selling anything, we don't really care about volatility. We welcome it. So obviously the cause is really the new COVID-19 variant, Omicron. Pretty cool name if you ask me. Is this a surprise? Not at all. They warned us that there could be more variants and more dangerous and contagious variants. Viruses mutate. We all know that, right? But of course, sheep will be sheep, and some people will panic, start selling their stocks, and this causes the overall market to go down. So a perfect opportunity for us smarter buy and hold income investors, right? So a lot of stuff went on sale right in the last couple of days, but it's still a bit early, I would say, to really know what the best deals are. Yes, of course, oil and energy stocks seem to have taken the brunt of it. They go down the hardest. Not really a surprise, right? More travel restrictions, more travel hesitation equals less demand for oil. So it's a no-brainer. And I got a pretty crazy pick this month to capitalize on the fall of oil prices, so brace yourselves. The other two are a little bit more moderate and expected picks. So the 4 criterias for my stock picks, as usual, guys, I repeat this every time. I own the fund or the stock myself, or plan on owning it in the near future, because I talk the talk but also walk the walk. Number 2, the fund or stock must provide a consistent source of passive income, so a dividend or a distribution. Number 3, the dividend or distribution needs to be relatively safe and sustainable. In other words, the fund needs to be really designed to provide passive income or this income, even if it fluctuates. As long as it's designed to do that, that's what I like. And number 4, the fund needs to have good value. So without further ado, let's check out my stock picks for December 2021. All right, guys. So pick number one is USOI. This is my US listed pick of the month. So it's the crude oil share covered call ETN. So this is a pretty crazy pick this month, but bear with me, stay with me here. Let's go through it. So the fund manager is Credit Suisse. The dividend payout is monthly. The current annual dividend is $1.17 a share. This is based on the average of the last 3 months. So we'll get into the dividend later and how it works, but basically $1.17 a share is basically the annual rate based on the last 3 dividends. So the 1 year high stock price, 570, yield of 20.52%. No, that's not a joke. But the current stock price on November 29th, it's actually a bit lower today while I'm filming this on the 30th. It's $4.93, which would give you a crazy yield of 23.70%. I still can't believe it, but it is true, and I could vouch for that because I actually own this fund myself. So what is this? So USOI is an ETN, so an exchange traded note instead of an exchange traded fund that holds a long position on USO. So USO is another ETF which basically tracks oil prices or the oil futures. It's called the United States Oil Fund or something like that. And to make income, they sell covered calls on this ETF on USO to generate monthly premiums. And because it's an ETN, exchange traded note, think of it kind of like a bond version of an ETF. They're called monthly coupons, but I don't want to confuse you, it is monthly income. So this fund actually has a termination date of 2037, so well in the future. And the management fee, it says the MER, but it's the actual management fee is 0.85. I'm not sure exactly what the MER is. I wasn't able to find it. So what does this ETN do? Well, I pasted the key features and some stuff from the fact sheet for you guys here. So like the key feature said, and like I mentioned, it implements a covered call strategy on reference oil share. So you have income potential in the form of a variable monthly coupon. So a variable or a fluctuating monthly dividend, basically. It's listed on the NASDAQ. And basically you have it here, the exact or the outline of what this fund does. So it implements a covered call strategy by maintaining a long position on reference oil shares, which is USO, and the covered calls are out of the money, approximately 6% out of the money. So the net premiums received, so the premiums received from selling these calls are paid out at the end of each month as a distribution. So this index strategy is really designed for monthly cash flow in exchange for giving up any potential gains above 106% strike price. That just goes for everything that uses covered calls, right? You're giving up potential gains for more income. That's basically what it's saying. So my key points and reasoning, why is this crazy pick a pick of the month? Well, first of all, I have to warn you guys, this is a higher risk, a higher reward, and a more complicated fund, but I have to do it as a pick this month. I was a bit conflicted about it. I know I'm going to get a lot of flack and criticism for this pick, but I don't care because this is my channel and I can do pretty much whatever I want. So the 20% yield, this is really the reason, guys, is very hard to ignore. 20% yield, think about that. Although the monthly dividend can vary, 20% yield, and right now it's actually over 20%, is fairly reasonable what you could get here. So that means if you hold this for 5 years, you could pretty much make all your money back, and everything after that is profit. That's how I see it. Okay, so why this pick? Well, oil prices recently tanked because of the new COVID variant Omicron. So it's a perfect time to invest in something that is literally just oil. You have high monthly income, although the dividend can vary greatly. So I have the distributions here. This fund's been around since 2017, and you see the annual payouts here. You actually see the current yield annualized. It's 23.89 right now. It's even higher right now, actually. So I'll show you what I'm talking about in terms of where the dividends could fluctuate. So I'm on the USOI official page, and I'm showing you all the dividends in 2021, and as you could see, they vary greatly, right? You have a 14-cent one. This was the November one, but then you had a 5-cent one, a 9-cent, 6 cents a share, 6 cents, 6, 10, 8. So very wacky. 18. It could change every month depending on the volatility of USO. Basically, is what I'm trying to say. So Let me just go back to full screen here. So another thing, if you look at the stock price chart, it will make you poop your pants. Okay, so I'm just giving you a warning. This fund was $18 to $20 pre-COVID, and now it's at like under $5. So these complex and niche funds or ETNs really seem to have trouble recovering in parallel to their corresponding assets. So if you compare USOI to what it writes covered calls on what it's based on, USO, you will see a pretty big disconnect, and you will see a similar thing with the other Credit Suisse ETNs, which there's three of them that deal with commodities. You have this one that deals with oil. You have, like I just wrote here, SLVO, which deals or is correspondent or in parallel to the SLV ETF, which is physical silver. And they also have one for gold. So basically what I'm trying to say is if oil crashes, this ETN will crash. And if oil recovers, like it has after COVID, the ETN has a very, very hard time recovering with it. Why, I don't really know, but keep that in mind. If you're really focused on stock price charts and stuff like that, this is definitely not the fund for you. This fund, for me, my opinion, is really something to hold and forget about. It's a very, like the last point says, a very niche and higher risk fund, not for the faint of heart. Take a small position, guys, put it in your RRSP if you're Canadian like me, so you don't pay 15% tax on that income. And just forget about it. Don't forget that the past does not dictate the future. And I wouldn't put more than 2 to 3% in this of your net worth. Personally, just full disclosure, I have $8,000 into this ETN, and it pays me a really nice, it's almost 6 or 7 months I have this, and the payments come at the end of every month, and they're really, really nice yields, and I am making about 20% yield on this myself. So this is pick number one, guys. Pretty crazy pick, but this is the best thing if you want to really capitalize on the big drop in oil price. But just fair warning, this is a higher risk, higher reward fund that I think is really designed to buy, hold, forget about, and just collect that income, and make sure you put it in a RRSP if you're Canadian. Second pick, SBC or BK. So the pick number 2 and pick number 3 are obviously TSX listed or Canadian listed. So I'll focus a bit on SBC, not BK, with this pick. So SBC is the Brompton Split Bank Corp. So it's a split fund. It's managed by Brompton. The dividend payout is monthly, and the annual dividend is set in stone at $1.20 a share, 10 cents a month, guys. So the 1 year high, 16.58, will give you a yield of 7.24, but right now a little bit on sale as of November 29th at 15.74. Which gives you a yield of 7.62. So really, really good. And this split fund only holds, or primarily holds, the big 6 Canadian banks, and enhances the yield or the income because it uses covered calls, and the split fund is leverage, right? It uses leverage. So the net asset value, this fund is actually trading at a discount as of November 29th. So its actual value is $16.72 a share. The stock price is $15.74 a share. So you're getting about a 6% discount, which is always a good thing. Pretty low management fee for this one because it's just the 6 banks, so it's nothing crazy. So it's 0.55%. So the reasoning should be quite obvious to you guys. The Canadian banks continue to be resilient. They continue to outperform the overall Canadian market. They're really the kings of the TSX, right? And also big news, right? Just like I talked about in my most recent video, bank dividend increases are coming. I think today we just got the announcement of Scotiabank was the first one to increase it. So other banks will probably follow. So dividend increases are always great. It increases the value and safety of the fund long term because there's more income. It's more sustainable. So this is an extremely safe split share fund, guys. One of the safest of all time because the unit NAV is over $26, way past the $15 minimum for the dividend to be paid out on the Class A shares. And also, this one has a stellar dividend history. Only missed 4 dividends since its creation, since its inception in 2005, and all 4 were during the 2008 financial crisis. So this split fund actually did not miss any dividends in 2020 during COVID volatility. So that says a lot on the safety of this fund. And when I say safety, when I talk about risk, I'm talking about the safety and the risk of the income. That's the most important thing for us, right? So also big news that this split fund recently announced that they're going to do a split So shareholders who own this fund before December 14th will receive a 25% more shares as a bonus, which will increase our income and our yield. But the dividend is to remain unchanged at $1.20 annual. So they did this really, I guess, because this is their way of giving a little bonus or increasing the dividends for shareholders. An identical split fund from Quadravest called BK, BK is a stock symbol, also made another announcement recently that they're increasing the dividend like 50 or 60%. So the BK split fund is pretty much Brompton's or SBC's main competitor. They're both split funds. They both hold the same thing, right? So BK could also be a great option for you if you really want more income. It's the more aggressive income, I think, out of the two, out of SBC and BK. So SBC is definitely less aggressive option, but probably will remain more stable long term. So check out my recent video where I go into some of these funds in detail, guys. I talk about my favorite ETFs when it comes to the big six banks. So make sure to check that video out for more details on that. Pick number 3, guys, is FAP, another Canadian listed fund. So this is the Aberdeen Asia Pacific Income Corporation Investment Company, whatever it is. So the fund manager is Aberdeen. It's a monthly dividend. The annual dividend is pretty steady, set in stone at 27 cents a share right now. So what FAP is, it's basically a leveraged fund that invests in Asia Pacific government and corporate bonds. So very, very niche. We'll check it out in detail in a second. So the November or the 1-year high price is 336, which is giving you a yield of little over 8%. But right now, a really nice discount at only $3, which gives you a nice yield of 9%, which is very hard to get on corporate bonds and government bonds. But that's thanks to that leverage. So the net asset value of the fund, and I'll talk about it in a second, is actually $3.66. So this fund is trading at an enormous discount, almost at an 18% discount. So a very, very, very good deal. And the management fee at 1.18% is actually pretty good considering this is a leveraged fund. So just to show you a quick clip here on from their fact sheet. So as you could see, it's 60% corporate bonds and 40% government bonds. So this is all fixed income, guys. My key points and reasoning. Why is this a stock pick? I know I keep saying that I'm not too big on fixed income. So why is this fund a pick of the month? And I always get a lot of criticism when I talk about this fund or why I like it. So let's look at the actual quote. This is the fund's mission objective, okay? So the company's objective is to obtain current income and achieve incidental capital appreciation from investment in long-term debt securities or fixed income. So why is this important? Because anytime you look or you read at a fund's objective and current income is before capital appreciation, the main objective of the fund is consistent income. So this is a really good sign for me, an income focused investor. I always like when I see that as the primary objective, right? Current income. This is a consistent monthly payer, so you get nice monthly income, a nice 9% yield, that thanks to the leverage. And the big reason is this fund has been going down and down in the last couple of months, and I think it's a great entry point at $3. You're getting a big 9% yield, and it's trading at a big 17% plus discount. So NAV, or the net asset value, is always a key consideration when you're investing in a closed-end fund. Because no matter what happens with this fund, you're getting a great deal, including if the fund terminates or if it closes, which I really doubt it's going to happen. But if it does close, they give back the investors the net asset value. So if that happens in next week, you make a 17% gain right off the bat. So it can never be wrong to invest in the fund at such a high discount, in my opinion. So this fund really adds exotic niche exposure to any portfolio like my own, because it's much less correlated to the overall stock market or equities. We actually could see that today and yesterday, where the stock market goes down like crazy. Anything fixed income usually doesn't move that much because it's not correlated to equities. It's fixed income. It's a lot more stable. So this is a cool way to add a little bit of exotic niche exposure to your portfolio. And don't forget, diversification is always king. So another cool fact, and this is just further proves my point that this is a no-brainer value play here. They have the same exact fund listed on the US stock market. The stock symbol is FAX, and that one, it has the exact same stuff, and that fund is only trading at a 4.67% discount, not an 18% discount. So this is really just proves it's a no-brainer value play. But don't forget, guys, this is niche exposure. Don't put a big position in this. Personally, I have about 1.30%, so less than 2% of my overall portfolio, and which equates to $10,000 in this. So, and also don't forget, because I know the criticism is the stock chart is bad. It went from here to here. Well, that's what debt securities have been doing in the last decade because of interest rates going down. So don't forget about the chart, guys. The past doesn't dictate the future. You're not buying this at $15 when it came out, whatever, 10 years ago. You're buying it now at $3. Okay, so it doesn't really matter. Buy this, leave it in your account, forget about it, and just make money while you sleep. That is what this fund is designed for. So these are the picks of the month, guys. So what do you think of my stock pick, guys? Pretty crazy, especially the first one, right? Let me know what you think. Drop me a comment below if you agree, if you disagree with my stock picks, or if you have any stock picks of your own that you feel are a good deal and they're income oriented, right? That's what we care about on this channel. I would really appreciate your comments. Of course, as usual, guys, don't forget to like the video. I would really appreciate it. Hit that like button. It's free for you. It helps the channel grow. It's a win-win. Also, make sure to check out our website, passiveincomeinvesting.ca. That's where you could access my digital product, the Ultimate DIY Investing Package, which is on version 3 right now. So this is a companion tool or a reference tool that I created to really help you build your own portfolio. So it has lists of ETFs, closed-end funds, split funds. It has sample portfolios for both Canadians and Americans, 14 sample portfolios total, all tailored to different investors, whether you're an income investor like me or a growth investor, a dividend growth investor, etc. So I have sample portfolios for everyone, whether you're Canadian or you invest on the US stock market. So make sure to pick it up. It comes with lifetime updates. So if you just got to buy it once, and then you get the free lifetime updates whenever an update comes out. So it's pretty cool. Also on my website, the other thing I offer is a one-on-one consultation service where you could talk with me personally for an hour via Zoom. So it's a very personalized one-on-one service. You could ask me a million questions. I could help you build a new portfolio, transition to an income-focused portfolio, which is my style of investing. That's the typical reason why people get the one-on-one. It's to help them build a income-focused portfolio. That's my specialty. So whatever the reason is, guys, I'm there for you. I love doing these consultations. Unfortunately, they sell out very, very quickly, which is still mind-boggling to me. So right there on the homepage, you'll see a calendar. That's how you book it, but make sure to check if it's available or not. There's a little message on the calendar. So I'm fully booked until mid-December. So I'll do an announcement via community post on YouTube and on Facebook and our Facebook group when the new appointments are available. Speaking of Facebook, make sure you join our Facebook group. It keeps on growing, over 6,000 members, and it's all about passive income investing. People share their stories and their experiences, and we talk about which funds they should get, and it's a pretty cool group. So make sure to join us there if you use Facebook. We're also on Instagram, so follow us on Instagram so you're up to date on everything that we're doing on all our video posts if you use that social media. And once again, guys, my mission, the mission of this channel will always remain the same. It's to help everyday normal working people to invest on their own, DIY investing. So they can invest on their own to build their own stream. You can build your own stream of passive income so you can enhance your quality of life and eventually become financially independent like us. Trust me, there's no better thing. So continue to stay safe. Watch out for this new variant. Get your vaccines, please. It's the best thing. We got them. We didn't get sick. We're fine. So don't listen to all the craziness out there, and continue to stay safe. And with that, guys, see you next time.